When you make a qualified domestic trust for a surviving spouse who's not a U.S. citizen, there may be an additional filing requirement on top of the typical fiduciary income tax return, and that is Form 706-QDT. The filing of this form and the filing obligation is dependent on taxable events during the year. So those would include a principal distribution, other than a hardship distribution, to the beneficiary spouse, or the death of the beneficiary spouse during the year. Now, generally, the U.S. trustee will be charged with filing this return and, as we'll talk about in a later episode, withholding tax. And it'll be due by April 15th of the year following the year of the taxable event. However, if the filing is triggered by the death of the spouse, then the due date will be concurrent with the estate tax return due date. I'm Griffin Bridgers, and this is 10 Minutes with Griffin. For today's episode, episode 202, we're going to talk about completing Form 706-QDT for a qualified domestic trust. This will be part one of a several-part series on the completion of this form and the general withholding requirements and trustee requirements for a QDOT trust and the nuances to those as well. So, if you're looking for more detailed information on the return preparation, stay tuned. There's more to come. It's just more than can be covered in this brief presentation. As always, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. And if you'd like a copy of these slides, please email me at griffin.bridgers@gmail.com. Now, we talked about in a previous episode the QDOT trust in general, where if you want to claim an estate tax marital deduction and the surviving spouse is not a U.S. citizen, then the only way you can get that estate tax marital deduction is to put the assets into a trust that qualifies as a qualified domestic trust and makes that election. Now, once that election is made, there must at all times be at least one U.S. trustee who is either an individual U.S. citizen or a U.S. corporation. And as we'll talk about in a later date, that depends on the asset value and mix within the trust as well as to who would qualify there. And in addition to the normal trust filing requirements that you'd have on an annual basis, such as Form 1041, the fiduciary income tax return, there's one additional filing requirement that must be kept in mind for a QDOT, and that's Irs Form 706-QDT. So this series of episodes is going to be about this form in general. Now, this doesn't necessarily have to be filed every single year. Instead, you would only file this if there's a taxable event during the year. So what we're going to have is a calendar year basis, and you have to look at, one, have there been any taxable trust distributions during the year? If so, you have to file. Unless it's a hardship distribution, as we'll look at in a later episode. Two, even if there's no distributions, you have to look at whether the surviving spouse died during the calendar year. If so, you have to file this return as well. It's to be a QDOT, typically by failure of trustee during the calendar year, you'd also have to file this return as well. And the latter 2 points, the surviving spouse dying or the trust failing to be a QDOT, is going to accelerate all deferred estate tax on that QDOT. Whereas a taxable trust distribution is going to be subject to a small estate tax just on that distribution itself, based on a cumulative calculation that we're going to talk about later in this series, because it's a little bit more complicated than we can cover in this brief time. Now, the due date is going to be April 15th of the year following the calendar year of the event that triggered filing, if the surviving spouse was living at the end of that calendar year. Otherwise, you're off that April 15th filing calendar, and instead, with an event that's triggered by the surviving spouse's death, you'd look at the due date for his or her estate tax return and use that as the due date for 706 QDT as well. Now, you can also get an extension for this return of 6 months, but you have to file the same form as for the basic 706 extension, which is IRS Form 4768. So extending income taxes doesn't automatically extend this return. It's a separate extension. And this return and extensions can be filed at the following addresses. There's a basic mailing address and one for private delivery service, all of which you can find in the IRS instructions for Form 706 QDT. Now, for the first 706 QDT filing, you have to include a copy of the trust, which is obvious. The IRS is going to want to review that and know of it. And that's even if you already had a 706 for the deceased spouse's estate that included a copy of that trust when the QDOT election was made. You still have to include the copy of the trust with the first 706 QDT filing. And then, for the last 706 QDT filing, you must include a copy of the death certificate for the beneficiary spouse. And note that this is going to be a separate filing from the beneficiary spouse's own 706 that's filed for their estate as well. So you're going to have kind of concurrent filings that happen there. Now, for the taxable events that trigger the filing, we're going to talk about these in later episodes, plural, because there's a lot of nuance to them that we can't cover here. But generally, we're going to look at principal distributions being the biggest trigger on a calendar year basis. So you have to look to whether the trust can actually make principal distributions to begin with. And if it does, even if they're not permitted, then there's going to be a filing requirement and a withholding requirement that we're going to discuss in a later episode as well. Now note that this only applies to principal distributions. It doesn't apply to income distributions. Income distributions have their own separate reporting on Form 1041 like you'd have for any other irrevocable trust. Another trigger will be the death of the spouse, which, like a Q-tip trust, will lead to estate inclusion. But in addition to the 706, if any, that reports this, you're also going to have a final 706-QDT filed by the trustee of the trust itself. And the spirit of both these events is that the marital deduction, when claimed by the estate of the first spouse to die, is just simply a deferral of estate tax, which will be collected on the back end. Now, there's a hardship distribution exception, which we'll cover in a later episode as well, which may provide some color to the principal distribution requirement and will relieve potentially that withholding requirement. So, what's to come in this series? Well, we're going to get into some specific breakdowns by schedule and part for completing Form 706-QDT. We'll get into withholding calculations as those factor into Form 706 QDT, but may require the 706 of the deceased spouse as well. We'll look at the effect on a portability election. In other words, to what extent can a non-citizen spouse use the unused estate tax exclusion of the deceased spouse in a portability election situation. Then finally, what happens if the beneficiary spouse becomes a U.S. citizen during the life cycle of the QDOT? In other words, in any calendar year where you have a spouse becoming a U.S. citizen, what do you do? And what effect does that have on this filing obligation? So lots to come in this series, but as always, if you have questions or topic suggestions, other than client-related questions, which I can't answer, please email me at griffin.bridgers@gmail.com. I want to emphasize that non-client related question, especially on discussions like this, because when I give instructions on filling out a form or basic directions, I always get people out of the woodwork. Oh, here's this nuanced situation filling out Form 706 QDT. Can you help me with it? And the answer is usually going to be no, I cannot. I can provide education, but I can't provide advice. But thank you for listening to this episode of 10 Minutes with Griffin, and I look forward to seeing you in the next one.